Well, let's get out to Dan Murphy, who has more on the latest decision out of OPEC and its allies. Dan, it seems as though the decision itself, no surprise for markets, but we did get some pretty interesting comments from the Saudi energy minister. What more can you tell us?
Well, Juliana, I think it's interesting to follow the price reaction here. I was looking over some historical price data, and it's hard to believe that in this week last year, oil was sub $40 a barrel. Now, you can see the incredible recovery that we've seen in prices since then, with Brent now up around 40% YTD, tracking at over $70 a barrel. Certainly some vindication for the hard work of these OPEC ministers who have been working to stabilize the market. Now, that's what we saw coming out of the meeting yesterday. The ministers agreeing to extend the easing of the supply curbs over the next 2 months. So more clarity on what the supply side looks like, but still a number of clouds on the horizon, as the Saudi energy minister put it, essentially saying that, yes, while we're seeing positivity on the vaccine rollout and the vaccine trajectory, there's still some lingering issues here, particularly when it comes to demand in the second half and what the global economic recovery looks like. One of the other key concerns that the ministers have is regarding new supply, particularly coming from Iran. At the moment, we have the United States, world powers and Iran attempting to negotiate the JCPOA 2.0. That's the Iran nuclear deal. And there is a belief that if we did see some kind of a breakthrough there, then we would have new Iranian barrels coming to the market. The big question is, how many barrels are coming back and when are they coming? Well, during the press conference yesterday, I asked the Saudi energy minister for his expectations on this. He said he'll do everything to defend the market in the face of new supply. Listen.
We want to give the market the assurance and the comfort that we will continue to be attentive and continuously monitoring the situation. And we will not leave this market exposed to any lack of attendance.
Of course, what happens with Iranian supply largely comes down to those negotiations. The report suggests that we have seen somewhat of a stall in those talks, and there's renewed concern that as we head into the Iranian elections coming up in the middle of this month, that we might not get a deal done beforehand. Now, clearly that would be an issue for these ministers, but it does buy them some time. Now, before I pass it back over to you, I wanted to give you some insights into some of the analyst commentary that we've heard off the back of the OPEC meeting, starting with UBS, who say, in our view, the oil market is going to welcome this additional supply from the group over the next few months. It says it now sees further upside in oil prices. It's calling Brent to hit $75 a barrel and WTI to hit $72 a barrel in the second half of this year. That is an additional $5 on top of where we stand today. At the same time, ING also saying that its view of the oil market remains unchanged following the OPEC meeting. It says Brent's going to average $70 USD into the second half, so staying at around where prices are right now. And ANZ also flagging earlier today that it believes this wait-and-see approach by OPEC is likely to see the market remain tight for the foreseeable future. It adds the likelihood of additional Iranian oil hitting the market in the short term is also subsiding, which it sees as a bullish factor. Back over to you.